Everyone. Welcome to another episode of Getting Real About Business, where we bring real solutions to real business problems. I'm your host, Andrea Ragu, and today, as you notice, I'm by myself. I usually have my co-host, Dana Hayes-Burke, with me, but we decided we wanted to do a special micro episode for you on a very important topic. One of my faves, cash flow. So today, I'm going to tell you the cash flow truth about why your business feels broke. So let me tell you a truth that doesn't get talked about enough. 82% of small businesses fail because of cash flow problems. They don't fail because of a bad idea, a bad product, or even lots of competition. No, they actually fail because of bad cash flow problems. And it happens all of the time. It's more popular than you think. Business owners are busy, they're booked and busy, and they're busy in the busyness of business, but they're not really making any real money, and they are still broke. The money comes in and the money goes right back out. And then before you know it, bills are piling up. You're negotiating which payments to make at the end of the month, and you're borrowing money from your own personal funds to see the business through. Here's the problem. You are not the problem. You're doing everything you're supposed to do. You're doing all the necessary things. You're working hard and you're showing up for your customers. You're perfecting your offer. You're doing all the things with the product or the service. But the problem is the cash flow management part is keeping you back. So it's not a hustle problem, it's a cash flow problem. And that's what I want to touch on today. What are the trouble signs and what are the simple things that you can do in your business to feel in control of your cash flow and to make sure you don't slip into the problem of the cash flow and have your business feeling broke? So let's start first with, if we want to talk about cash flow, I think the very first thing we should do is understand what is cash flow. So cash flow, simply put, is the money, your cash, flowing in and out of your business. It's the process of understanding and managing where that money is coming from, when it is going to come in, and when it has to go out. Right? Simultaneously understanding the two sides, where the money is going, where it has to go, when the money is coming in, when it has to go. So the cash flow is the management of the cash, the money flowing in and out of your bank account. And at this point, I want to highlight a significant issue. Most people equate that to understanding the profitability of their business. And I want to make the distinction that when we talk about cash flow, we are not talking about profit, that they are two different things. Profit is actually an accounting concept, right? Cash is, as opposed to cash that is real. Cash is the real thing in your bank account, as opposed to profit that is an accounting concept that is calculated. So in accounting, we take things like your sales minus expenses, we give you profit. But that does not necessarily equate to what is happening in the bank account. For one thing, the profit calculation does not take into consideration whether or not you've actually gotten the money in your bank account. So if you were to calculate profit and you had sales of 15,000 and you had expenses of 5,000, the profit calculation would tell you 15 minus 5 is equal to 10. However, your cash flow is going to ask the question, out of that $15,000 in sales, how much did you actually get paid, or did people pay you late? So if out of that 15,000, you only got paid 5, the cash flow is where you start to see the difference. So it's important for us to make sure that we understand the difference between managing our cash flow versus managing our profit. So now that you understand the difference, now that you understand what cash flow is and what it isn't, let's talk about some common cash flow struggles that you probably find in small businesses. I'm going to touch on a couple of the popular cash flow struggles. The first is late customer payments. This is the bane of any business owner's existence. Customers not paying on time. So you see this typically happening in a service-based business, or even if you're product-based and you have contracts with customers that they pay you for product maybe over a couple of months, right? Anytime you introduce the element of giving your clients time to pay, you run the possibility of having this problem happen to you where they pay late. And the struggle with the customers paying late is that when they pay late, it throws you off. It means you don't have the money at the time that you expect to have it to do what you need to do on your outflow side. So have customers paying late is a significant challenge for small business owners. The second issue we have with cash flow is irregular cash flow. So apart from customers are paying late, that's a separate issue. You have the issue of irregular inflows coming in, meaning your sales are irregular. So you're not quite sure when it's going to come in. You don't have consistent arrangements that would say, I get $10,000 every month. So you may find this happening maybe in retail spaces where you have to depend on when the customer wants your product, right? Based on customer demand is when you will have that. So versus a service-based business that might be able to have a contract, let's say, with a consistent amount. So irregular flows and irregular cash flow can be a problem with managing your cash flow. Apart from irregular cash flow now, on the other spectrum is seasonal cash flow. So not to be confused with irregular, seasonal, you can predict because it's based on the season. So if your business is tied to a particular season, or if your product or service becomes more in demand at a particular time of the year, what you're going to have happening is highs and lows as it pertains to when you get your money. You're going to have all your money coming in clumps at a particular time. So what that means is that there's a seasonal dip. When the season is over, you're not going to have cash. So the problem with the cash flow at that point in time is, what do I do in between those highs, right? You have to plan your cash flow that you will be able to meet your obligations when you're out of season. So seasonal dips is a common cash flow problem for small businesses. And one last one that I want to highlight is fixed costs. Fixed costs are disastrous for cash flows. Reason being, it has no respect for what is happening in the business. Fixed costs have to happen whether or not you have a sale. So fixed costs like your rent, like payroll, these things have to happen whether or not you have a great season or a bad season. That's the problem with fixed costs. So it damages, or it puts pressure, I should say, put pressure on your cash flow because you have to have this obligation. You have to do this. There's no adjustment. So if the cash happens to be low in that month, that's where you find yourself in problems because you're not able to adjust because it's a fixed cost that has to happen. Fixed costs will come in things like we mentioned. Rent is a big one. Rent is usually a major one. You have payroll. And also things like subscriptions. It might sound small, but subscriptions are some fixed costs that could run you into problems depending on how many you have, right? Something I actually like to call the subscription addiction. As small business owners, we love all the different apps that there are. And yes, they can help make things better in our business. But do you have too many? Before you know it, an easy couple $100 is coming out of your credit card every month for various apps. Over time, that could add up. So fixed costs really puts pressure on our cash flow and could attribute to the struggles of a small business owner. Now, these struggles manifests itself in different ways in a business, right? You may not necessarily know that it's happening, but here are some signs. If you're not sure, here are some signs to let you know that your cash flow is getting problematic, right? So one of the first things that would happen is you're behind on paying things. So you might, if you have a loan, let's say, maybe you're struggling to meet to when that loan payment comes around, you're paying it late, or maybe on vendors' side, suppliers, you're behind on paying them, right? So you're behind on the obligations in that you cannot meet it at the time that you are required to meet it. That's a sign of poor cash flow. Second sign, if you cannot pay yourself consistently, that's a sign. If you are not in a position where every week or every month or at a particular interval, you can't pay yourself a consistent amount, that's a symptom of poor cash flow. It's a symptom of cash flow problems, meaning the cash flow is not allowing you to pay yourself consistently. So that's a sign that if you're seeing this happening, something is wrong with your cash flow and you are struggling. Third sign, so dipping into personal funds to support the business. So this looks like the money in the bank account has run a bit low, or you don't have enough funds and you may use your personal funds to support the business, either by literally taking money out of your personal account and dropping it into the business bank account, or using your personal funds for business expenses. So sign number 4, relying on future things coming in to settle something that has already gone. So what that means is you had a payment that was due last week. You were unable to make the payment. There wasn't enough cash in the bank account. So you're now waiting for this week's activity to now fund and pay that liability from last week. You have a timing issue, right? The cash, you didn't have enough cash available at the time that the obligation was due. So now you're waiting on new cash to come in to settle it. That's a sign that you're digging yourself into a cash flow hole. And the last one is you yourself don't know your numbers. So not knowing your numbers is a sign of poor cash flow, because how could you manage what you do not know, right? So if you yourself as the business owner don't know the numbers of the business and don't have an understanding and appreciation of where the money comes from and where the money goes, that's a problem of not understanding your cash flow enough so that you can manage the business better, and you're not going to make good decisions about cash flow. And when you make bad decisions about cash flow, well, hence all this conversation that we're having here, you run yourself into problems. So what's the solution then? If these are the problems that business owners have with cash flow, and I've explained some of the signs. So if these things are happening to you, you would have an idea of, okay, you have a cash flow problem. What are some of the things that you can do? So let's get clear with some strategies that you can do to manage your cash flow better. So the first thing is relating to just what I just said. Get clear on the numbers. So the first thing is to start to understand your numbers of your business, right? And how do you do that? Well, first thing, if you're still using a spreadsheet to track your stuff, let's stop that right now. Ditch the spreadsheet and start using an accounting solution to track your ins and outs. So if you're not clear on your numbers, it's because you're not aware of the transaction. So get the transactions together and start putting them into an accounting solution so that you can better track the money that is going in and out. The second thing you want to do is make sure you have that proper separation, which means no commingling between personal and business. Commingling is the death of proper cash flow management. When you commingle, you lose sight of what is really happening in the business because you're not sure which is which. So you want to make sure that you're not commingling. So if you're commingling now, you need to make that separation. So first things first, if you didn't have a business bank account, you need to go get one immediately. And secondly, if you do have one and you're just managing it poorly, you need to adopt the practice of ensuring that you don't use your personal funds for the business and you don't use business funds for personal. So you want to make sure that you can make that separation immediately, a very clear line between the business funds and your personal funds. Number three, the third strategy that you need to adopt is you need to start forecasting your monthly cash flow. You need to get in the habit of doing a look ahead of at least 30 to 90 days and get out of the headspace of today for tomorrow or even this week for this week. You need to be able to plan better by sitting down and forecasting at least the next 30 days, just to get in a space of what to expect. Understand that forecast so that you can plan for what happens. The next thing that you can do is let's speed up those receivables. So one of the main struggles that I identified was customers paying late. So you need to streamline the receipt of those receivables. That might look like maybe getting clearer on your payment terms or getting a bit stricter on the payment terms in terms of your follow-up. Sometimes the reason why customers pay late is because maybe you yourself not following up in a timely manner. So make sure you have systems in place for timely follow-up to ensure that persons pay within the deadline. And also when they don't, then the next time around, they don't get the deadline, they don't get the timeline, right? So really take a hard look at the timelines that you have customers paying in to see how best you can maybe shorten that and get it as quickly as possible so that you can get your money faster. And then the last thing is, we spoke about the fixed costs. We spoke about having too much of those things. Review your expenses and trim the unnecessary things. So I mentioned subscriptions before because those things could add up quickly. Review your expenses to see maybe you have a couple of subscriptions that not really necessary right now, and maybe you could trim the fat a bit and unsubscribe for a while and see if you could get the use elsewhere. Sometimes you would not believe you might be paying for the same service on 3 different apps and didn't even realize. So review your expenses. Subscriptions is just one example. You might have another type of expense that may be no longer necessary. You want to review and really identify what is truly necessary and trim the unnecessary expenses. So there you have it, guys. In this episode, I dropped some cash flow truth bombs, and I explained to you why, despite all your best efforts, your business still feels broke. But don't worry, as outlined in the episode and these couple strategies that I gave you, there is hope and there are things that you can do. And now at this time, I'm going to leave you with your hustler to CEO moves. That's right. I'm going to leave you with one thing that you can try to start to do, because it can get overwhelming, and we know, sometimes you want to know, what's the one thing I can do to start? Well, here's the one thing you can do to start. Know your numbers. So in order for you to manage your business properly, you must know your numbers. And knowing your numbers means understanding your baseline. So the one action I want to leave you with is do a forecast for at least the next 30 days. Why? Because that will give you the numbers that will allow you to plan for the future. So sit down and assess what is going to happen in the business, or what is happening now and what is going to happen in the next 30 days. And that gives you an idea of your baseline and where you are right now. And I want you to take it a step further, and every week go and revisit that forecast and adjust accordingly. So you're doing it for the next month. but you're doing it week by week so that every week you can come in and see, well, I predicted that this was going to happen, but instead this actually happened, right? Understand the cash in the bank. What is your current bank balance right now? So that gives you a sense of where you're starting from. And then you're going to start to build in the expectations of what you expect to receive versus what you expect to pay out. You bring those together, and this gives you an idea of what your cash flow situation is going to be like for the next 30 days. So you're doing this. Why? To spot the problems before they become a crisis, so that if you do it now, maybe in 2 weeks' time, you may be able to foresee that you're going to have a problem. So you'll be able to take an action now. So that means you start operating from a place of certainty rather than a place of guesswork. And you start training your brain to run your business like a CEO would, not just hustling from day to day. And you're just running around, just being busy in the business of having a business, right? So thank you for joining us today. I'm so happy I was able to talk about this topic. I really do like talking about cash flow with small business owners because I believe it is the cornerstone of a successful business. At the end of the day, if you don't have cash, nothing can happen. So thank you for taking your time to watch this special episode and take away the comments that was said and implement it in your business. Do stay in touch with us. We drop new episodes on the first and the third Thursday of every month. So do look out for us. Subscribe so that you never miss another episode. And let us know in the comments, is cash flow a problem for you? How do you manage it? And also let us know if there are any topics that you'd like us to tackle in another episode. Till next time, take care.